right there. It's no good. It should be happening here. Okay? Not way up there. You're too late. You're chasing it. You missed it. It's like the 5th bar up and you're trying to buy it. It's extended on its move into the target. You're trying to buy it, right? And you shouldn't be buying it too early in the pullback. You need to see that next turn, right? Now this could be a 1 bar drop and it goes. This could be a 3 to 5 bar drop, okay? If there is no pullback, okay, if there is no pullback, the only time you'd be buying after the move would be on the other side. It still wouldn't be here, right? It would be here if there was a 1 bar pullback. So it would look like this. 1 bar, let's say it's a ribby, right? Whoops. 1 bar, and then we start to go right there. The buy would be here on the ribby. It's still not on this side. You're still not buying after the move, right? You still have a correction. It's just 1 bar and then it goes. Or it's a give back and then it goes. There was something. You didn't chase the thing all the way up to the top and then say, oh, I should buy it now. Right? So on the cycle, it's buying on the transitions, on the turns. It's taking profits on the extended moves. Right? So that's not a good buy. So where you're taking profit, pivot trailing, that's one thing. But if you're doing bar by bar trails or into targets, you're going to find you're taking profits either into or just on the other side of those, not way down there. Right? So where would I want to take profits on a move? Right? Either right after a bar by bar break or right into a turn. Right? So big 5 bar move up, book profit, new buy setup. Okay? Somewhere up in here on the turns and then here on your buys. So when you have your trades on a chart and you see your executions, your buy arrows are blue and your sell arrows are red. You should see your buys below your sells, right? It would make sense. So when you put that in the downtrend is the opposite, right? Everything's in reverse on the downtrend. So when it comes to buying pivots, right, or shorting through pivots, and there's a move. Say there's a move, we can do a move down. That's fine. We can talk about pivots on the downside. So a big drop, we rally up, and now here we come down to this drop. And the sell setup was here. So where should your short have been? Right there on the sell setup. Unless, and I'll draw candles in a minute, guys. I'm still going over theory here. Right? Unless this was 1 bar, right? Unless that's the igniting bar clearing the pivot. But if this is the 3rd or 4th bar drop, this is the mistake I see all the time. There's a sell set up here. There's 4 red bars down, and this red bar breaks that low, and you want to short it now. Okay? This is the biggest mistake that I see made. Okay? If that's the 3rd or 4th bar down in a row, and the sell setup was up here, you are so late on the short, it's not funny. So now you need to let this go, come back up, hit this in a sell setup, and then short it then, right? Or it has to break and you get a pause and then it goes and you short it then. Because so many times you are going to short this and it's going to go like that. And you're going to take an L for no reason. Okay, I will use this opportunity. I will play this as a long so many times. 4th bar down, 5th bar down, breaks a pivot, comes right back up, and I will buy it right there. Why? Because where are you supposed to buy uptrends? Right on the transition. But how do you know that's an uptrend? I don't. But I know that the downtrend is supposed to make a significant new low, and it didn't. So now there's a chance that that's going to do that. And guess where I'm in? Right there where I'm supposed to be. I'm in on transition. right? But what if it rolls over and it is a downtrend? Well, then I'm out right where I got in, and so what? And I should have been short up here. So if I'm not already short, I don't short until when? The next rally up into the next sell setup. Not way down here, unless there's a GBI or something. Right? And remember too that you're supposed to be doing things at or near your moving averages, right? At or near the 8, at or near the 20. So if this is downtrending, and you're supposed to be hitting shorts here and here and here, well, where do you think the 8MA is when you're hitting those shorts? At or near the 8, at or near the 8. If you're shorting it down here, you're most likely far away from the 8. Right? You're definitely far away from the 20. So if that's the 8MA and this is the 4th bar down going through the pivot and you're trying to short, you're not following anything. You're not at or near, your location's off, like everything's wrong. Okay? So if you remember the two things, your event at location and your market cycle, where are you in the cycle? So if you're moving up and the next bar takes out that high, is this the time to start a long? Like right now, is that a good long? No, it's not. It's a terrible idea. Is being long bias okay? Yeah, but that's not an event. There's no way I'm at or near the 8 and 20 anymore. Okay, so you can have a long bias, but you can't do a long entry, right? And this is what I meant earlier. So there'll be a resistance here. Let's say there's a 200 right here. Okay, and then someone will see the 200, and then the next bar will open, and they'll go, oh, it's breaking the 200. We got to go long. That is a horrible trade. Okay, what would be a good long trade? This goes through, the next bar comes back, test the 200, and then the next bar after that turns, maybe it even bases a little bit first, and then it breaks. Oh, wait a minute, now that does happen. Root for it to go farther and faster and more extended, because you'll get two trades out of it. You'll get a counter and a possible reversal, or you'll get a counter and then a higher low, and you get to play it again to the upside. So if one of those things does follow through, don't get all mad. Oh, I should have shorted the 4th bar. No, you shouldn't have. And this happens once in a while, great. Root for it. It's the reason why when you take profits on a short, you leave a bar by bar trail. So let's say you shorted that like you should have. You hit the pivot low for a double. You took half your profit. Then you took your short and you stuck it right there. And then it kept bleeding bar by bar. And you just kept ratcheting down your stop bar by bar. That's when you make huge wins. That's great. It's not going to happen all the time. But when it does, take advantage of it. All right, so you got your pivot figured out. This is the mistake. As the setups happen, look, at or near the MAs, not away from the MAs, not on the multiple bar drop, the 4th, 5th bar that's breaking the pivot. Now, if it's off the sell setup, right? If it's off the sell setup and that bar cracks your pivot, that's an igniting bar, right? That's an igniting bar. So now you can play a give back trade or a GBI, right? You can look to short, like, listen, man, if there's follow through here, I'm shorting. You just need a good risk reward. You don't want to put the stop way up here. So if the next bar pokes back up and then breaks, now short that low, right? If you get this thing, if you get a little poke through back up here like this, and then your short starts to trigger, yes, now short that right there with a stop right here. That's not multiple bars. That's an igniting bar down. Okay, there's a huge difference in those two events. All right. All right. That's good for today's lecture. All right, boys and girls. I know I was supposed to do that Friday, but I ran out of time, so good little review today. And that's not the only time we do this. I mean, I do this every so often because it's, there's always new people coming in, and it's one of those topics that gets easily overlooked because it's the simplicity of it. People take it for granted and like, oh yeah, it's up, down, sideways, I got it. Oh, last point. Hold on. Last point about this because it ties into the other market law 4 thing. This is the other mistake I see made all the time. All right. Please get this right too. There's a rally, there's a pullback, and then as soon as this gets to the prior high, trader starts screaming double top. That is not a double top. Okay? Or there's a drop, right? I see a drop, a rally, a drop, and as soon as it hits that low, double bottom. It is not a double bottom every time it retests the prior high. Because if that was the case, you could never have a trend. Because then it would be here and say, oh, double bottom. Nope, got to bounce. Nope, double top. Nope, triple bottom, triple top, quad bottom, quad top. We could never have a trend. So every single uptrend that pulls back will have to retest its prior high in order to continue trending. So you don't start screaming double top every time it gets to the prior high. If and when it hits and fails to make a new high and breaks that pivot low, now you can go back and tell me you have a double top. It is a late confirmation pattern. Double tops are not the instant it hits the prior top. It's when it breaks the low. They are late confirming patterns. So if you're trying to play prior high resistance, it's not because it's a double top, right? The only time you should be doing this is if it's a market law 4. That's when you should look to play those prior high failures. Or there's some major resistance already in place that you're playing off of. But it's not an igniting move, pulls back and then into the prior high with a rising 8, and you guys start shorting that price. Telling me double top. No, it isn't. Okay. Now, if I have 1, 2, 3, 4 pivots up, and now I hit that and it starts to look a little weak, I am going to try that short right now, especially if my 8MA is down here, because that's the 4th pivot, and I'm banking on this failing. I'm shorting aggressively at the prior high, wanting to see the double top confirm and have this thing fail, bounce, and I caught the top of the down move because I'm at the end of my trend. That's a different trade. That's a market law 4 trade. But you cannot keep shorting uptrends every time. You know how many trades you get wrong if it's a trend? You're going to short the prior high. Wrong. Short the prior high. Wrong. Short the prior high. Wrong. And where are you in the cycle doing that? You're late. So if you're doing those, it should be on the turn over, right? Should not be on the way up. Do not anticipate that uptrend and short that price. Don't do it. Don't fight igniting bars. That's another one. If an igniting bar fails, it's like an outlier. Like, okay, that didn't work. But don't short it. Don't go long on an igniting bar to the downside. Not good ideas. All right, I got to take a little break here. It's almost 1. All right, so good lecture. I know I gave you lots to think about and hopefully clarified some points. If you still have some questions after you go through and think about it some more, can talk about it again tomorrow, right? But kind of dwell on it, review some charts, take a look at some things, clear it up. Okay. We'll get back at it tomorrow. We'll do it again. All right, guys. Have a good one.